Well, markets have recorded fresh all-time highs across the past week. In fact, in the US, the S&P 500 has recorded 6 new all-time highs over the last 7 sessions. But will this continue, or are we about to see things end? So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday, the 30th of January 2024. And before I get into it, you do need to be aware that whatever I say is general advice only. It does not consider your personal financial circumstances, and you have to decide whether it's appropriate for you. So like I mentioned, all-time highs. We've got a beautiful image of a bull charging here. Perhaps it's AI, perhaps someone created it, who knows? Regardless, what we do know is that markets have kept powering higher. Like I said, the US market has had a series of all-time highs over the last week, grinding higher and higher again. Even when their futures are lower, it seems like we come in each morning and their markets closed higher again. For our own market, obviously we sold down throughout most of early and the middle of January, but we've pushed right back up over the last sort of week and a half, 2 weeks, and we're right back at our own all-time high. So today we got within a couple of points of our all-time high as well. Now, here in Australia, we haven't been quite as voracious in chasing those all-time highs. We've basically struggled to push beyond our previous all-time high. Part of that is due to our miners not quite continuing higher, and they do make up a really big proportion of our market, maybe even up to a third of our market for the big iron ore miners. And that's because iron ore really isn't quite at its all-time high level. Our iron ore miners really aren't quite as profitable, as they would be if iron ore was at, say, 200 US a ton as it was in 2021. So instead, they've really struggled to add too many further dollars, despite the fact that they are at very high levels. And as a result, it's the banks that have had to do a lot of the heavy lifting. So that's meant all the big four have been pushing higher. CBA's gone to an all-time high, but even then, the valuation on those banks is getting very, very stretched as well. So our market has to look for other stories, other shops, other businesses to push higher. And I think it's found it a lot more difficult to find stocks to buy to push our own market up than they have in the US, where they've got a plethora of obviously very attractive companies that investors are happy to keep pushing higher and higher. Regardless though, prices do look very high at the current levels. In fact, for the US market, looking at their price to earnings ratios and things like that, aside from some spikes during COVID, their levels are very, very high. Historically, their operating earnings averages are around 17. They're up around 23 at the moment. Their reported earnings averages are, I think, around sort of 22 at the moment, and historical average is about 16. So they're very, very expensive shares on a price to earnings basis. And they are seeking to justify that with the view that interest rates are about to come down. Now, this is going to be a major test for our market and a major test for the US markets in the coming sessions. That starts with the release of Australian CPI growth, Australian inflation data, which is coming out tomorrow at 11:30 a.m. Australian Eastern Standard Time. It's expected to come out at 4.3%. Some people are saying it's going to be higher, some people are saying it's going to be lower. But regardless, it is still a very, very high level. It is coming down slowly, but at 4.3%, it's really hard to see an RBA rate cut anytime soon. Now, other Australian data has started to weaken, and indeed we saw Australian retail sales weaken today. But regardless, with CPI sitting at 4.3%, that doesn't really point to a near-term rate cut unless we see spikes in unemployment, and we are really yet to see that. So overall, I think our market's gotten a little bit ahead of itself in forecasting near-term rate cuts, basically because inflation's still well above target and because unemployment really hasn't started to spike yet. So that will be a test for our market that's coming tomorrow just before midday. And then following that, we will get the test for global markets, the big one, the one we've all been waiting for. So that's going to be the Federal Reserve meeting for January. Now, again, we've seen markets rally into all-time highs, and that's mostly on the view that we're going to see rate cuts in the near term, and we're going to see a soft landing. While data has pointed to a soft landing, US GDP was stronger than expected, other US economic data is stronger than expected. US economic data has also been fairly inflationary recently. Their recent CPI growth was well stronger than expected. The only thing was maybe the GDP price index was slightly weaker than expected, but overall the data is still looking fairly inflationary in the US. So I think our market, the US market, global markets have gotten well ahead of themselves in saying that, inflation has been dealt with, in saying that we're going to see a rate cut in March, in saying that, rates are going to be cut back to really low levels and economic growth is going to stabilize and remain strong. I think a market is taking a bit of hopium or copium maybe at the moment, and really I think the Fed's going to pour a bit of cold water on everyone's hopes and dreams when they meet tomorrow night. The real risk for the Fed is that they basically allow rate cuts to occur. They basically allow bond yields to come right back down before inflation is really dealt with. And if they have to try and start raising rates again and we get a reinflation scenario, it's going to be a lot harder than it was initially, and we're going to end up with much higher terminal rates for much longer than if they sort of perhaps hold interest rates at a higher level at the moment. Keep in mind that oil is up around 10% over January. Keep in mind US CPI data, inflation data, continues to come out stronger than expected. So I do think the market's hope of a March rate cut is way overdone. So let's have a quick look at the charts. This is our market, the XJO, and we've played a bit of catch up over the past sort of week or so. We've rallied for 7 days straight, which is very uncommon for our market. We've gone from roughly some support around 73.20 to the all-time high at roughly 76.30. We bounced from that level today, so it remains to be seen if we're going to start to form a double top pattern at that 76.30 level. Like I said, the valuation on a lot of our companies is quite stretched at this level. We're really going to need to see some of the non-bank, non-mining sectors start to step up to the plate, and probably the non-discretionary sectors as well, because they're also extremely expensive up here. We're going to need to see those sectors step up to the plate and do some heavy lifting, because it is hard to justify further price gains in the miners and banks. So with that being said, we're at resistance 76.30. We need to wait to see if this holds or if we fall back from here. If we do, we'd be looking for a move back towards this potential uptrend line, and then if that breaks, back towards 73.20. Keeping an eye out for a potential double top pattern being fulfilled up at 76.30. For the US market, they've continued to push into fresh all-time highs. They broke above that 4,700 level. They broke above the 4,800 level. They've now broken above 4,900 overnight, and we're going to have to wait and see where they stall out. I do think there's some risk with the Fed meeting. That's going to be tomorrow night, so they won't react to it in tonight's session. If they do sort of stay flat tonight and then sort of fall on the Fed meeting, that could be a reversal pattern. But at the moment, the momentum, all the technical indicators are still pointing up for US markets, despite how overbought they look, despite how expensive they look. So yeah, that's it for this week, guys. Extremely positive markets at the moment. They do look very overbought to me. We've got some key tests for them coming up over the next 48 hours, and we'll have to wait till next week to see what the outcome is. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you in the next one. Bye for now.